Good morning and welcome to GrainTV. It's October 18th, 2012. I'm Logan Burgess. Joining me to my right is Brock Shimano. Brock, let's jump into fire tip here. See how the grains are trading in Chicago this morning. Right now we have grains up across the board here. Soybeans, the leader to the upside, trading up to $15.41 here, taking a good bounce off $15 per bushel here. If we take a look at Kansas City wheat and Chicago wheat, both trading higher there as well. Right now we have crude oil trading down about $1 a barrel. Dollar index taking a little bit of a bounce here after a couple days of sharp selling there. Big news in the grains though this morning is the export sales report. Brock, do you want to break down those numbers for us?
We did get the weekly export sales from the USDA this morning. Corn came in right at expectations, right in the middle of expectations, 167,000 metric tons. Soybeans missed the mark a little bit, came in at 523,000 metric tons, and wheat actually exceeded expectations, coming in at 410,000 metric tons. If you take a look at these charts that we developed to track the progress throughout the marketing year, you can see that the blue bars are actually what we do see as export sales for the given week, and the red line here is actually the forecasted sales given seasonalities, what we should be seeing out of the export sales report. Like I said, corn did meet expectations. We're about 6 million bushels ahead of pace due to those sales that we made last year for this marketing year. We carried those in, so that does put us a little bit ahead of pace, but we did fall 5.8 million bushels this week due to this bar right here. If we take a look at soybeans, turn our attention to soybeans here, you can see that a similar story. We did make some hefty sales early on or before this year, last year, and we came into this year quite a bit ahead of pace. We're actually about 266 million bushels ahead of pace to meet the USDA expectations right now, but we did fall another 6 million bushels this week, and you can see we have a pretty small bar here, well below what we were forecasting to actually meet the USDA expectations. Looks like throughout this year we will be falling, so it's going to be a trend that we're going to have to watch as we move throughout this marketing year. You know, that's the export sales report. Logan, you wanted to break down ethanol margins a little bit further. Why don't you take us through what you saw there?
Yeah, Brock, well, yesterday we did get the EIA numbers, and we reported those kind of in the context of what we saw the week prior and how those compared to last year. Well, today we wanted to kind of break down how these ethanol numbers stack up to the pace that the USDA has outlined here for ethanol production throughout the marketing year. As you can see here, the red lines are weekly ethanol production, and the green line is a seasonally adjusted pace that we need to achieve to use 4.5 billion bushels of corn for ethanol that the USDA has outlined in their October WASDE report. If you take a look here, we're well ahead of pace right now, about 17 million bushels. Right now we're not seeing a revision higher in corn bushels going to ethanol, but that's certainly something that we need to keep an eye on. We've established a good pace here, and we certainly, if you're bullish this corn market, we really want to see the ethanol pace continue here moving forward. If we take a look at this a little bit of a different way right now, this is actually the ethanol crush numbers. The ethanol crush margin right now. If you take the spot price of ethanol plus dry distillers grain minus the price per bushel of corn, this gets the margin that the ethanol facilities are actually receiving here. Right now the green line is what we saw last year on a price per bushel basis. Right now the red lines here are where we're at this year. Understandably, with the exceptionally high price of corn, ethanol margins are quite a bit lower right now, around 150 here. They've actually taken a rebound in recent weeks with the price of ethanol moving up a little bit and the price of corn selling off here from the highs that we printed during the summer. But that's certainly something that we need to keep in mind here. Higher ethanol margins are good for production of ethanol, therefore more corn bushels go into ethanol production.
You know, I think something else that'll help ethanol demand is going to be anything that goes on with the oil industry right now. We do see some turmoil in the Middle East with Iran saying that they might dump some oil into the Strait of Hormuz in case, you know, they're basically trying to get back at some of the other Middle Eastern countries that are having a trade embargo against them right now. So if we do see that happen, we could see the price of crude oil go higher, which would also put demand closer or more on to the ethanol industry to produce more ethanol.
Certainly. We'll have to keep an eye on that here moving forward. A lot of moving pieces right now for the demand side for the corn and soybean market. Here on GrainTV, we'll keep you posted on that. I think that wraps up our show here for Thursday. Tomorrow we're going to be getting cattle on feed report. We'll also be getting some Informa numbers. One of the big figures that I'm going to be watching out of that Informa report tomorrow, they're going to be giving a harvested acreage estimate. Right now the USDA is sitting at 87.7 million acres there. So a lot of people are going to be watching that very closely there.